Perfect. I see 12:03 p.m. here on my clock, and I would like to be respectful of everyone's time. So I'm going to go ahead and start today's webinar. Welcome, everyone. My name is Mary Angie Carriles. I am the HAR Program Manager and your facilitator for today's program. Welcome to today's webinar, Realtors, Lenders, and VA Loans. Before I formally introduce today's panelists, I would like to remind everyone that today's webinar is being recorded, and I will share that recording with you once it's ready so that you are able to share it with the people around you and rewatch it if you need to do so. Of course, watching live is always a better experience, and we are going to utilize the chat today for you to ask any questions you may have throughout the program, and we'll make sure to answer those. Now, just a reminder, this is not for CE credit, so you won't be on camera or we won't be able to hear you. But again, the chat is there to make sure that you gather all the information that you need to for this webinar. Now, it is my absolute pleasure to introduce Carlene Johnson, or CJ as we call her. She is an Air Force veteran, a certified divorce real estate expert, and the president of Houston, Texas chapter of the Veterans Association of Real Estate Professionals. She thrives to assist her clients and network by being a real estate, military, and veteran resource for the greater Houston area. Today with CJ is Anthony Navarro. He works for the Texas Veterans Land Board as the marketing specialist and outreach coordinator for the Houston and Southeast Texas. Anthony has organized or assisted with dozens of events and benefits fairs that have helped hundreds of local veterans. And lastly, I'm sure many of you know him, Chris Kelso. He's currently the area sales manager for the New American Funding. Chris is also a radio co-host and co-founder of the Real Estate Rat Pack show. It is an absolute honor to have all three of you here with me today. We have a lot of information to go over. Veterans Day was just a few days ago, so I'm sure everybody's very excited to hear what you have to say and answer all those questions. So I'll open the virtual floor to you guys.
CJ, you want to get us kicked off?
Hello, everyone. Wonderful to be here. Thank you, Mary Angie and HAR for this opportunity. And thank you to Anthony and to Chris for taking this time, because our goal today is to make the VA loan where it's no longer a bad taste in people's mouth, where we provide education, information, so that you're able to go out and advocate on behalf of the VA loan, along with being able to educate other real estate professionals that didn't have the opportunity to attend this webinar. Now, getting started. First question. This is going to go to Chris and Anthony, both of you. What is a VA loan?
So 200 points, Chris.
Believe it or not, I'll start and then I'll let Anthony take over. But for those who don't know, all three of us work very closely together. And first and foremost, I want to say to all of our military personnel, thank you for serving. We wouldn't be here being able to do this webinar if it wasn't for our U.S. men and women of the U.S. military who protect us today, who will protect us in the future, and who protected us in the past. So thank you all very much, by the way. And what is a VA loan, right? So in the essence of what it is a veterans administration. So it is for those who are currently serving, who meet the requirements, or those who have served who meet the requirements and can obtain financing through the VA administration. And you also have, and Anthony will answer this, it's not only a VA loan, but you also have the ability to get financing through a program called the Texas VLB, which is the Texas Veterans Land Board. And so the simplicity side of things, I'll let Anthony, if I point this way, it's because on my screen, he's this way to me. But I'll have Anthony answer that question from his standpoint.
Yeah. So the Texas Veterans Land, thank you all for joining us today. So the Texas Veterans Land Board is another option for veterans to be able to get loans as well. Just like the VA is your federal, the state of Texas also has programs that also benefit veterans living in the state. So it doesn't matter where you joined or your client joined, it's where they're living now. As long as they have a Texas valid ID and a residence in Texas, they're able to go ahead and utilize the state of Texas VLB, Veterans Land Board benefits programs. Absolutely.
And I will say, Anthony, and I'll say this really fast, people don't realize that the VA lending and Texas VLB coexist, right? There are plenty of times in which we are doing a traditional VA loan and we are taking advantage of the Texas VLB program on top of that, right? And there's different cases in which we're going to do, though. You also have, and you'll probably talk about this later, but land financing. So just an FYI, it's not like they compete with each other. They actually don't. They work with each other. So both Anthony and I work very closely with each other.
Yes, definitely. Go ahead, Anthony.
No, yeah, absolutely. So the VLB offers land loans, home remodeling loans. So it's different programs that one can utilize with the VA or in conjunction with the VA. So, it's a great opportunity for us to answer these questions and break down the stigma of what programs are available to veterans. The state of Texas has a lot more to offer. Absolutely.
And thank you for that, both of you. One of the reasons why I asked the question, what is the VA loan, is because as a realtor, what I realize and what I've encountered is and heard that some sellers think because the VA loan has zero down, the veteran submits an offer with zero down, they think that means that the veteran or has no money. And so the VA loan, a part of one of the things about the VA loan is that the Veterans Administration guarantees a percentage of that loan. And so that is why the veteran does not have to put a down payment. They don't have to submit a down payment. They can use that money. That doesn't mean they don't have the money. They're able to use that money for other things because the VA, the Veterans Administration, guarantees a portion of that loan. And so this is one thing for realtors to be able to educate their sellers with regard to why it's okay to accept a VA loan, right? Just having that clarity and being able to articulate that to the client, I think makes a difference. That's one of the reasons why I wanted to ask what the VA loan is, because I want us to be able to equip you with information that you can take back to your sellers. And I'm coming from the realtor perspective.
And CJ, let me add to that if you don't mind. I tell everybody is we all know what sweat equity is, right? So a lot of times in business, you've got sweat equity, right? Our veterans have put in sweat equity they put their lives on the line, right, to serve our country. And so what the Veterans Administration gives back to them is the opportunity to get 100% financing. And it doesn't mean it's worse financing. It means that it is that 25% basically is the number. It means that they can apply for 100% financing if they qualify and have a COE that allows them to qualify for 100% financing and not put any money down. It doesn't make them less qualified, because I ask everybody all the time is, if I could give you a loan with no money down, the best interest rates, no mortgage insurance, by the way, and if you're a disabled vet, greater than 10% disabled vet, no funding fee, would you not take that if you did not serve on the military? And your answer would be, heck yeah, I'd take any day of the week and put my money elsewhere. And so that is just what's going on. It's actually one of the best financial tools that exist out there. And actually, we have stronger VA borrowers than we do sometimes traditional borrowers because of the financing that VA allows them to do.
Yeah.
Thank you.
I think Alicia's got a question, CJ. I just think we should answer that one just to make it clarify. She wants to clarify if the VLB is an assistance program or offers assistance, and the VA loans are actually loans. So the VLB is actually, we actually do the loans according to what the veteran's trying to get. So if they want to get, if their option is VA or FHA or conventional, the VLB will use the standards of those loan programs and to do the loan. So the state of Texas is the guarantor, which is the Veterans Land Board. We're just going to follow the criteria and the requirements for each of those loans to see which one the veteran qualifies best for. and it depends on the mortgage person that's doing the loan. Isn't that right, Chris?
That is correct. And what I would like to say, Anthony, and the way I usually describe it, because people ask me all the time, they're like, well, what's the difference? Well, what's going to happen is, remember, VA itself doesn't lend, right? So VA itself on a traditional mortgage is not a lender. VA guarantees a lender like myself against default, and they establish the parameters associated with lending, but they themselves don't lend. Banks, credit unions, independent mortgage bankers like myself, we're the ones who actually lend the money, and then you have the servicing companies that service it. So the best way for me to describe it is, I have sometimes that clients will come in and do a VA loan and we'll leverage VLB. So you heard about down payment assistance, and I'm not trying to say it's the same thing, but it's an overlay. So I can overlay a Texas VLB on a VA loan, on an FHA loan, on a conventional loan. It's an overlay I'm allowed to do based on the underlying criteria of the loan program that we're seeking out. And that's probably why you think probably the best way to say it, Anthony, right there.
Yeah, yeah.
And one of the questions that I know that was posed previously was, are there any local or state programs that can complement VA loans for Houston home buyers? And there it is, the Texas Veterans Land Board. And I know personally that there are a lot of realtors and lenders that have questions about the Texas Veterans Land Board. And so Anthony is open to you calling him at 4 a.m. to ask those questions.
Make it 5, CJ. We don't do 4 in the morning. We open at 5 now. We don't open at 4. So yeah, you can call me pretty much before 5 is a little too early. 5 to 5 is fine. But yeah, the Veterans Land Board, we loan $726,200 for a residential or commercial. I mean, not commercial, but residential or acreage farm, like a small farm. So whatever you can buy with $726,200 is what the Veterans Land Board can offer. Absolutely.
And I think it's important when you said that. They are absolutely incredible. People sometimes ask me, well, then why would I, let's assume I'm doing $1 million home on a VA loan, right? And can I leverage another down payment assistance, or can I leverage Texas VLB? Well, it depends on the standards. Some lending programs have different standards. VA itself has no loan limit, right? If you qualify and you have a clear COE. However, if I wanted to leverage the Texas VLB, I am limited to a loan amount, which is the conforming loan amount, by the way. So that $726,200 is actually Freddie Mac, Fannie Mae's conventional loan amount limits. So they follow those loan amount limits. So you have to understand that when you're working with a VA loan, it's not only you can use down payment assistance. I have several clients that might use, and they're not on here, but might use Seth or TSHAC or TDHCA in conjunction with the VA loan. And I can use Texas VLB in conjunction with the VA loan, or another type of loan as well, FHA or conventional. The same thing I can do with all those programs. So just because you're leveraging a VA loan does not mean you cannot leverage some of the other programs that are out there, whether it be Texas VLB or the other down payment assistance programs.
Okay. Thank you both. And so I want to try to hit some of the previous questions that were submitted in addition to the ones that are being entered in the chat. One of them is, what are the key eligibility criteria for a VA loan in Houston?
So I guess I'll start off with the generalization from that perspective. So number one is, the very first thing we're going to ask is if you have a certificate of eligibility, also known as a COE. Okay, your COE is going to let me know, is going to define from my perspective or any bank's perspective, do you qualify for a VA loan? Now, if you are in an active military status, you're going to have something called a military leaves and earnings statement, an LES statement, right? So that's how I'm going to look and see, do you qualify if you're active military, based on a couple rules, like do you have a 90-day active duty rule, et cetera, et cetera. There's certain rules out there that we have to make sure that we do. But that's the number one error. The number one error that most people make a mistake on in VA lending is they don't, number one, ask the question, are you a veteran? And let's start off by that. You have to ask the question. By all loan officers, it was put in 2 years ago. We have to ask on all loan applications, have you served in the military? That is one of the questions we have to ask. But I would say, as a realtor, you want to ask the same question, because you want to be able to assist them in finding a lender that specializes in military lending. I mean, the reality is a lot of people, and I say this to everybody, just because you have a license to do a loan doesn't mean you have a license to do a VA loan well. Just being honest with you right there. A lot of them don't. And so you want to make sure that you can define that. And then as long as they have their certificate of eligibility, or they complete their 90-day rule, or it might be a surviving spouse, or they might have completed 6 years of their duty. And when it comes to reserve, we just have to make sure that we have validated that. And then you would qualify for all the requirements associated with a VA loan. And then again, Texas VLB, they've got some requirements as well. And Anthony, I'll let you hit on those.
So the requirements, of course, you have to have the COE, DD 214. The minimum requirement for us is a 620. And if you're disabled, which is a great question we had earlier from, I believe, Sandra, if you're honorably discharged, you can qualify to use both programs. Absolutely. So that's a great point. If you're 30% disabled or more, the VLB will offer a half point off the interest rate right now for our veterans who are trying to get qualified. So I know Ms. Jackie was asking a question about the first steps when a veteran comes to a realtor. How do we start the loan process? How do we prepare for our loan officers? So basically asking if they have a DD 214 is really important, because sometimes our veterans don't have a DD 214, but they did serve. So it may take a little time to get that DD 214, find out from them if they did serve. And then if your loan officer does loans with the VLB or VA, some loan officers don't know how to do any of them, both. So it's kind of important to understand which ones you work with, Miss Jackie, just to make sure, because people say they know how to run a VLB loan, and then they're hitting every wall on the block. So we want to make sure that we help them expedite that loan. So making sure that we have the survey on your property that you're trying to buy, that can delay a loan. So we want to make sure we touch those bases for sure. But the VLB is a very simple loan, just like Chris mentioned. So these are some of the requirements we need. We need a survey loan, a new survey at least, 620 minimum credit score, DD 214 for you to get the disability half point off the interest. Absolutely.
And another thing I would like to add is one of the things both of or all of us agree on is having a mortgage lender that is proficient in VA loans. One of the reasons why VA loans end up taking over 30 days is usually, in most instances, because it's a mortgage lender that is not proficient in VA loans. A mortgage lender that's proficient in VA loans knows the processes to put in place in order to make the VA loan go smoothly. There are mortgage lenders that can close a VA loan. I know some in 14 days, have closed in 14 days. So the COE is one of the main things. If you ask a mortgage lender, first and foremost, how many or do you service VA loans? And if they say I've done VA loans, the next question would be, how long does it take for you to typically close a VA loan? If they say 45 days, you may want to create partnerships with mortgage lenders that you know are going to keep the process smooth for the veteran, because that is, once again, one of the reasons why the VA loan has such a bad reputation, because there are mortgage lenders that are learning as they go when they process a VA loan, and that extends it. So then another question is what Chris mentioned is the COE. If you ask them, when do you pull the COE? Don't explain what COE is, etc. Just ask them, when do you pull the COE? Their answer to that question will tell you a lot. If they tell you before the loan closes, or if they ask you, what is a COE? And they're doing a VA loan, that is not the lender you want your client to work with, because the COE is pulled at the beginning. That is what gives the criteria or gives information as to whether or not that veteran qualifies for a VA loan and all the parameters with regard to it. So those are things that you don't have to be as proficient as a lender, but at least be able to, as realtors, equip yourself with enough information to be able to help your client vet the mortgage lender that is representing them in the transaction. That's just my little 2 cents.
And, I'm going to add to that, by the way. If you just because you have the word veteran in your name, by the way, does not mean you're proficient on it. Okay, just going to let you guys know that, and the other companies out there who do that. But to add to what you talked about, CJ, is make sure you ask those defining questions. Number one is, are you licensed to do VA? When was the last time you closed a VA loan? How long did it take you, as you mentioned right there? My stats as of right now, 18.9 days is what I'm averaging on all my VA loans. Okay, when's the last one I closed? Last week. When's the next one coming up? November 21st. And so the reality is you have to be able to speak and know that when you're speaking with somebody, that number one, they've got the veterans' interest in mind. And remember this, here's the one thing, the reason why people ask me all the time, well, Chris, I know you say some of these big companies that are online, why aren't they as proficient? There is more and I'm going to tell everybody the dirty truth about this. Lenders make more money originating a VA loan than they do any other loan out there. So they can afford to hire all these call centers, okay, to put people who don't know what they're doing to originate a VA loan because there's so much money. And if they screw up on half of them, they've still got the other half they're making a ton of money off of. And that's the reason why VA lending has to have this conversation to it, because our veterans deserve better than an 800 number that somebody doesn't care about them. It deserves somebody to be local, who understands what they're doing, who understands how to get past the nuances, when to pull in Texas VLB, when they might be able to pull in one of the other down payment assistance programs, when they can leverage their 100% financing, when they actually might already have a property in Tennessee and they're buying here, and how to do that calculation associated with a second home under the VA eligibility. So it's very important to understand that. Make sure you're working with a loan officer who is truly somebody who's qualified or works on a team that is proficient in VA lending.
Yeah. And there was a question, there are 2 questions I saw pop up. One of them is, what is a DD-214? The DD-214 is a document that when exiting the military, that is the document that is issued to exiting active duty. It's a document that's issued that
discharge.
Yes,
Okay.
COE is Certificate of Eligibility. Yes, that is what that stands for. The DD-214 is when we exit the military, the document that tells our status. It's basically it's the verification that we served in the military. And that document is like the stepping stone to identify what benefits that veteran qualifies for. Every veteran, when they exit the military, will receive that document. Some may not know where it is. They don't necessarily need an honorable discharge. It can be an other than honorable discharge, as long as it's not dishonorable discharge. And even in that instance, that can be appealed. So, but that certificate, that DD-214 is key, is the main document that they need.
And they ask, where do they have to go to get their COE? You would come to somebody like me. You would go to a lender who is proficient in VA lending and say, hey, if I'm a veteran, I need to go ahead and see, or I don't have a copy of my COE, and I would get a copy of their DD-214. Literally takes me no more than about a minute, and I will get an electronic copy back of that COE that I would provide to the veteran. Now, there were a couple of years for our older veterans in which there was a fire that took place at the Pentagon. And that is the only, I think it was between like 1996 and 1984, if I'm not mistaken. The veterans who served during that time frame, if they don't have their COE, that would be the only one that takes a little bit longer, because some of those archives were not able to be put in the electronic system. But it's super easy, and we haven't had to go through the non-electronic system in forever. It's super easy.
Okay. How does the VA funding fee work, and how does it affect overall loan costs for clients they're saying in Houston?
Perfect. So a VA funding fee is a nationwide thing, by the way. So whether you're buying a home in Houston, or you're buying it in Dallas, or you're buying it in Fort Wayne, Indiana, I'm just using that as an example, by the way. So VA has what they call a funding fee. Now, The way the funding fee works is the following. If you have a service-connected disability, which we're going to see on your COE, then you would have no funding fee. Okay, I don't care what state you're in, you would have no funding fee. But if you have less or don't have any service-connected disability, then your funding fee is based upon two aspects. Number one is, are you putting any money into the transaction or not? And is it your first transaction or your second or greater? Okay, that's the way it works. It's super easy. So on your first transaction, okay, the very first time you're going to use it, your funding fee is actually less, 2.15. And your second time usage, it goes up to 3.15, okay? However, if you're putting greater than 5% down, okay, then your funding fee is actually 1.65. It actually gets lowered. And if you're putting less than greater than 10% down, then it's 1.45. Now, these are national numbers out there. These are not my numbers I'm making up for Houston or for anything like that. And if anybody wants to, I have a complete VA guide that I can send you. Put your email in the chat room. And at the end of this, I'll send you over those numbers so you have that guide. And that guide does show what those VA funding fee numbers are, which is pretty cool. But that's sort of how it works right there. It's really easy. Now, if you're doing a VA IRL, and by the way, IRL is not spelled EARL. It's an interest rate reduction refinance loan. That's another way you can define if a realtor, if a loan officer knows what they're doing. So it's spelled IRRRL. It's 0.5, which is the funding fee. And if you are doing an assumption, a VA assumption, it is 0.5. And that's always a good thing. We can always talk on about, why a VA to VA assumption is better than a non-VA to a VA assumption.
But also to add to that, what if they have a 10% or higher VA disability rating? What happens to the funding fee?
There is nothing. It is zero. So anything greater than a 10% VA or service-connected disability, you have no funding fee. And if you're in Houston, let's talk about Houston because we're all in Houston, right? If you're 100% disabled vet, you would have no property taxes that I have to qualify you on. Okay. So it's no property. In fact, in the state of Texas, if I'm not mistaken, there's only 2 counties, by the way, in which they don't have no taxes if you're 100% disabled vet. But if you're 100% disabled vet in Houston and all of our surrounding counties, there's 7 surrounding counties, all the counties have the same thing. We would not have to collect your taxes for you or qualify you on a tax payment for the purpose of qualifying you for that home loan.
So we've got a couple of questions there, CJ. Where do you get the TD 214? Can Chris pull it? You can go to in different counties. I guess everybody's around the state here. So in the county that you live in, your VSO, your Veteran Service Office or officer, can do a DD 214 pull for a veteran that lives in your county or the district you live in. So that's how you get your DD 214. It's the VA administration, so they have to be set up a system to be able to pull those. One question they had, Anthony, what's the minimum percentage you can start deducting points, and what's the ratio percentage points to deduction? I'm not quite sure because we can't do any buy downs. VLB doesn't offer buy downs. That's the rate that we offer it. It's 7.208 is our going rate, but if you're 30% disabled or more, it's 6.58. So there's no buy downs. There's no money that you're putting down to buy down your interest. That's the rate that we offer for our veterans. It's really low across the state, but that's what we pretty much do on that aspect. We can't buy anything down from that. We don't charge extra points for that.
And on a regular VA, I will tell you, we always look and by the way, they wanted you to repeat that range again right now, Anthony, if you don't mind, on what you just got through saying.
Yeah. So right now, our interest rate for non-disabled veteran is 7.08. And then if you're disabled 30% or more, your interest right now would be 6.58. For 30% more. Yes, sir.
And I will tell you this. I say this all the time. CJ and I talk about this. A VA loan is your best loan out there, bar none. If you were to ask me to rank all loan products, all loan types, VA loan is your best loan type, right? It's also the best loan when it comes to interest rates as well, okay? So if today's rate on a conventional was a 7.625, we'd probably be at a 7.25 when it comes to a VA loan. Now, traditional VA loans, you can buy down points. So under Texas VLB, you cannot, because remember, very similar to what all of our overlays are, that would be their interest rate. But if you were to come to me and say, hey, I don't qualify for a Texas VLB, or we don't qualify you for that, but I want to buy down points and you're eligible to buy down points and it's something you want to do, you can buy down points or discount points on a traditional VA loan, as long as they're bona fide, by the way. Okay, so it has to be a bona fide discount point, meaning that it truly is going towards there. And as long as it meets the requirements associated with non-allowables, right? Because you also have non-allowable fees associated with the VA loan, okay? Anything that exceeds the 1% rule. And so you just want to make sure that you are on those areas and understand. And a loan officer like myself, we would walk through that with the clients to find out what their best needs are and what they're looking for. And I will tell you, I had one the other day who actually called me up, 100% disabled vet. And I said, are you familiar with the Texas VLB? Okay. Because if you're a 100% disabled vet, I'm sending you over to the Texas VLB if you qualify, by the way. And he said, yes, I did. Unfortunately, on this one, though, he was buying for a loan amount that was higher than what he was going to be eligible for under Texas VLB. And so the reality is, though, is somebody who is focused in on the VA lending is going to know all those aspects of where to put those things over to get your client the best type of financing for them.
So they've got a question about the VLB, Jen Foster. What's the process if someone's already used a VA loan and the VLB benefit and wants to purchase another home or a land lot? So for the VLB, for the VA, if you already have your VA and you've already used your VLB to purchase a home, you have to pay off the VLB home loan to be able to use that program again. Now, if you have a VA loan, which is with a home loan, and then you bought another VLB home, and now you want to buy land, you can do that. You can still buy a land lot or land loan up to $150,000 with a minimum of 100. It's got to be 1 acre or more. The VLB will loan you to buy that land with 1 acre or more up to $150,000 because you still have that program available. But if you've already used both home loan programs, then those are already locked in until you pay them off. Now for us, for the VLB, you can use the VLB home loan once it's paid off, but the land loan it's a new purchase. You can do that up to $150,000.
And with the land loan, one of the things to note is that I've had questions where when purchasing using the Texas VLB, that land loan, is it that you have to have plans to build on the home? No, as long there is no requirement with regard to what you're going to do with that land. It's as long as you're a veteran and you meet the requirements, then you're able to purchase that land and let it sit if you want to. So that's another thing, another benefit. The interest rate for the land loan, Anthony.
Yeah, 7.2. 7.2. It went up from 6.9. It was 6.9 forever. Now it went up just last week or 2 weeks ago, actually. Yeah.
Yeah. I know. What'd you say, Chris? Go ahead.
I said they're phenomenal. Land loans are phenomenal. So
yes. Because 7.25 for raw land.
Absolutely.
Yeah. And I know that I think I saw a question from Zelda where she asked about the funding fee. Is the funding fee waived only for the first purchase, or is it for the 10% disability or higher? Is the funding fee waived only for the first purchase or any subsequent purchases?
Any subsequent purchases as well. That is correct. Yep. And I know there was a question out there also. Someone was asked about debt to income ratio. Now, I'll let Anthony talk about debt to income ratio on the Texas VLB. I'll start off with the traditional financing. So VA itself has publicized a 41% debt to income ratio. Okay. But VA uses something called residual income. Okay. So VA, if you ask me, has the best underwriting program out there. It takes into consideration other factors, housing expenses, childcare expenses, union dues, et cetera, et cetera. And so what VA does, they say, is that you have to have a certain amount of money left over after purchasing a property. It's called residual income because VA wants to not only put people into homes, but keep people in homes, right? But if you have 120% or greater of your residual, in other words, 20% or greater of your residual income, you can move up from your 41% DTI to a higher DTI. So in many cases, we see VA loans that we might have a 50, a 51, a 52. Probably the highest I've done is maybe 63. Now, we're not putting veterans in a bad spot on the 63, by the way, and I'll go into reason why on that. But you can go higher on debt to income ratios as long as the veteran meets their residual income and has some compensating factors. Maybe they're prior homeowners. Maybe they have good longevity of the job. Maybe they have a history of rental. Might be a history of a whole bunch of different things. But some people get confused that VA is only 41%. We do plenty of VA loans that are higher than 41%. That are in the 50s. And so just an FYI from that perspective. Then Anthony, talk about Texas VLB and what their requirements are.
So our requirements are a mirror image of whatever the programs that we're trying to offer them. If it's VA or FHA, we pretty much have the same, you can either do 5% down or you can put 0 down like VA, depending on what it is, the requirements. The VLB will do a new product loan. So, it depends on the underwriting and their actual credit score, but it's very simple to get the VLB loan. You just have to make sure your person that's doing your loan understands the requirements for the program.
And here's one of the things, speaking with Anthony, here's one of the reasons why we say this. So let's say I have a client who has a 602 credit score and a 50% DTI, right? And they want to know why I'm not sending it over to Texas VLB. Well, you heard Anthony say this a bit earlier today, right? And the reality is I have to have a 620, okay? But if that same program, if I had a 621, okay, and I had a 50% DTI, I could leverage Texas VLB. And so, again, it's about understanding the nuances of how everything worked together to be able to make sure you can make those deals happen for your clients.
And the VLB can only be used for residential. There's a lot of great commercial lots coming right now during these times. And I've seen them because they're everywhere right now. And everybody wants to buy them, but we only do residential. So residential parcels or residential homes, nothing commercial. We don't, VLB does not do any commercial lots or commercial properties at all.
What about mixed use?
Negative. Nothing.
No. And a VA loan is only for your primary residency, by the way. So a VA loan is a primary residency purchase only. So meaning is if I'm buying a second home, you can't do it. I'm buying an investment property, you can't do it. Okay. So you have to understand it is for and I know, CJ, which one you're going to talk about right here, but it is for a primary residency only. CJ, go ahead and insert right there.
Yeah.
With that being said, that you can purchase up to a fourplex as long as you
occupy,
live in one of those units.
That is
so
correct.
It's not necessarily an investment property because it is going to be your primary residence, but you have the ability to use the other 3 as investment as long as it's a fourplex and you occupy one of those units.
And CJ, you and I have talked about that. That's one of the most misused opportunities. Yes. I don't care of any type of financing, whether it be VA, FHA, conventional. Imagine you buy a duplex, a triplex, a quadplex, and you occupy one of those units. You got the other 3 that can be income producing, can literally pay for your entire note, or you can make money off of it. And VA allows that. So it's a phenomenal product.
Yes.
And VLB can be used for that. VLB can be used for that too. So that's good.
Absolutely.
Here's a question. What steps can realtors take to help their clients improve their chances of VA loan approval in Houston? And I'm thinking it's more not approval, but for the process acceptance. To be smooth. Yes. Yeah.
So number one, I'll start off with that one because that's a big pet peeve of mine because I see it all the time. So I'm going to tell you guys a story that took place, and this should never happen. And the reason why I say this is because the more we understand this, the more we can educate people. I had a veteran about 6 years ago, about going on 7 years ago now, that came into me. We got him all pre-qualified, and he came back to me about a week later and said, "Hey, Chris, can I up my pre-approval?" And I said, "Absolutely." We upped the pre-approval, went back again, came back a week later, said, "Chris, I need to up my pre-approval again. The agent is saying that they're still not satisfied with my offer." He ups it one more time. It's 3 different times. Finally, he comes to me about a month later and said, "I lost the deal. I don't know what's going on. I was distraught. I was buying the property because I was buying it in the community where my daughter lives to be next to my grandchildren," right? So he's walking through the neighborhood about a week later, and he sees the man who was selling the property outside, okay? And he walks up and he says, "Hi, my name is X. Won't let you know his name. And I made 3 different offers on your property. What could I have done to earn, to earn this contract? And the seller said, what offers? They were never presented to him. Because they were a VA loan. They were never presented to the seller. Make matters even worse, the seller was a veteran. Okay. And so one of the things, and here was the one thing that I told him at the very beginning, and if I look back on it, I've always done this. Make sure you're working with a lender who's going to pick up the phone and call the listing agent. I have so many cases in which I pick up the phone, have called the listing agent when I found out they were not excited about a VA loan. And after speaking with me, whether it be reputation or the explanation or training or education or one of it, they say, you know what, Chris, you've convinced us. We're going to either accept it or I am going to put that as an option. Another example, one time I had a veteran call me up and say, Chris, we need to change my VA loan approval to a conventional because they don't have VA financing as another option. I called the listing agent who I knew, by the way. And I said, by the way, apparently I've got a VA loan that wants to make an offer on your property. We're not accepting VA loans. And she says, Chris, it's you. We'll accept it from you. Now, a normal person would have said, okay, great, I'm safe. But that wasn't what I did. I said, well, let me ask you a question. Not everyone's going to be able to use me. I wish you guys would. Don't get me wrong. I want to get every loan out there. But what if somebody offers you a loan that's not me for a VA perspective? And she said, Chris, I don't trust anybody else. And the reason why is because not everybody does what we talk about. So this is what we have to do. We have to educate more individuals, working with loan officers who know what they're doing. People are going to pick up the phone and make that phone call. People are going to pre-approve their clients up front and know the programs. And if it's Texas VLB or it's a down payment assistance, understand how to do that and make sure that you make them comfortable. At the end of the day, a seller's best option is the one that's going to close, right?
Yeah.
That's your best option at the end of the day. And so that's what you have to ensure, that it's one that's going to close.
And another thing for realtors is don't be afraid to pick up the phone. If your client sends you a property, that VA loan is not an option. Don't be afraid as the buyer's agent to pick up the phone and contact the listing agent and ask, can you tell me why the VA loan is not an option? And in a lot of instances, the response will be, well, my seller does not want to accept a VA loan. Well, in most instances, we as agents know our sellers are going by the information we provided them. So that's the time for you to say, okay, well, why not? And you ask questions and educate. That's an opportunity to educate that listing agent that may not know the real and updated, accurate information about the VA loan. And in a lot of instances, once you educate that listing agent, they will say, oh, I'll talk to my seller, and then eventually they'll come back and may accept it. But don't be afraid to call out listing agents, call them, have a conversation, because if you review that seller's disclosure and there's nothing that stands out with regard to, about the property where it would not qualify for a VA loan, it's okay to pick up that phone and say, can you tell me why? Because we have to get in the habit of doing that so that more realtors are held accountable for what they are or are not, the information they are or not providing to their clients, to their sellers.
And I will say this, if you can accept a VA loan, an FHA loan, you can accept a VA loan. VA loan is the best lending out there. And it follows, and appraisal-wise, it follows the Freddie Mac, Fannie Mae guidelines. It follows all the normal guidelines, all the NPR stuff that you need out there. It follows all traditional stuff. You're not having I will say this, right? And CJ and Anthony, you guys will probably agree with me. VA lending 20 years ago was done wrong, right? It was done wrong. And it's still done wrong by several people today, but it was done majority wrong 20 years ago. If you do something wrong for a long enough period of time, you create a bad habit, right? Yes. And so that's what this is about, is saying, guys, it's not the way it was 20 years ago, right? There might be individuals who don't know how to do it, but in general, the VA lending is the best one out there. So don't be afraid to get engaged. And if you're a listing agent, make sure you're not afraid to validate it. If can accept VA lending. And more importantly, if you're a buyer's agent, as CJ said, pick up the phone and make that phone call. I understand here you've got a conventional and an FHA loan. I have a veteran that would be great for this property. Why aren't you accepting VA loans? It could be as simple as, you know what, I forgot to press the button. Or it could be, I don't like VA loans. At that point, I hate to say it, I had people call me up. I'm not even doing the loan. Call me up to talk to the agent to make sure that we can explain to them why VA loans are the best loans out there, right? And so it's just a matter of having those conversations, though.
And I think, I think over the past 6 months, I think realtors, I've been educating the realtors, and I think the more we educate them and understand the programs, the better they'll become have those talking points with their client. I think that's the best way to do it. Educate them about, the zero down payment assistance programs. There's other programs out there that can help, but the state of Texas is the VLB. That's the loan from the state of Texas. So it's not going anywhere, and it's not being sold to anyone. So it's a good program. If you can use it, utilize it. Absolutely. I'll help you sell your property.
And Carmelita, thank you for using it 5 times. By the way, you put that in the chat right there, which I think is great. If veterans were a protected class, we could definitely be having a different conversation. This, unfortunately, it's not considered a protected class, which is why you can't file discrimination against it, which is why this education has to be out there like this.
We'll put that on the podcast, Ms. Black. She's got her own podcast. We need to do a 2-hour segment of that one, okay?
Oh, I would agree with you there.
And with the question I just posed about steps realtors can take for the Texas Veterans Land Board, is there anything you wanted to add, Anthony, with regard to how to help, make the process smooth as realtors, what we can do?
Yeah, as realtors, if you can have a survey already on the property, or if you're selling the land, the survey, our time limit, our time starts to close the deal from the time that the Veterans Land Board in Austin receives the survey or the new appraisal. That's when our time limit starts, our 30-day counting clock or 45-day counting clock to close the deal. So I've seen some people submitting it 3 weeks late after the ball's already been rolling. They're submitting their loan paperwork. All of a sudden now they're submitting their actual surveys, and then there's an issue with the survey or something's wrong, and it delays it longer, and then they lose the deal. I've seen that. Great opportunity to win a good lot or land. Then they lose it because the seller gets upset because now it took longer. So if you can, kind of educate your clients, make sure you have all your information ready to go to submit it into the portal. The veteran themselves is communicating with the state of Texas in their actual portal to get those loans processed, or through the actual person that's working with Gateway, which is our lender that's overseeing our loans. If you're having a good communication with those lenders, then it should be a smooth process. But you can always reach out to me if you need to expedite it. I'm always willing to help. I've got my contact information on there. And I also put a landing page on there. If you're looking for more information about the product lines, feel free to sign up for that newsletter and then click on the information, so that way you have a link to it. When you do have a veteran, you're able to educate them and show them the program. And if that's something they want, that's an option for you at 620, and it's case by case. I don't know if you had that, Chris, but sometimes you don't have to have a 620 on some things, and they'll do case by case, because we know COVID really destroyed a lot of people's credit scores. So I've seen some credit scores less than 620, but it's going to be a case by case of what's going on.
There are some extenuating circumstances that we use. Now, here's one thing I'm going to tell you, and Anthony's going to tell you this as well, and this is something I can't stand, is that some people will come. You have some lenders that will advertise, oh, we do all this, we'll do Texas VLB. They're not even set up with Texas VLB. Right. And so it's the bait and switch. Let me just get it in, and then I'll convince them why Texas VLB wasn't the best one for them. Yeah. And so the one thing I would say, and Anthony, you know what I'm talking about, because it happens all the time. I will literally, I'm going to go with this person because I'm like, but they don't have Texas VLB. Like, they're not set up with Texas VLB. And so one thing I want to make sure that everybody understands out there is, if you want to take advantage of these programs, make sure you work with lenders that are truly set up with Texas VLB. And you can go out there and look which lenders are set up with these different down payment assistance programs, or Texas VLB in this case, right? Because that is the other thing I think still that we have to show realtors why it's important to work with people who know how to work in this business.
Yeah, Chris, I think you're right. Nobody wants to overpay. And I can give you an example just recently. I mean, I oversee 40 counties. So just recently, a veteran was paying $18,000 for a house with a builder. The loan was sent over, so for us to kind of review it, he was actually paying 14,000 more than he should have. So can you imagine? Nobody wants to lose $14,000, and if you're the realtor selling this property, you're about to lose it because you're being overcharging the veteran. In this case, the veteran requested the money be returned. The builder returned 14,000 out of the 18 because they were overcharging. They knew they were overcharging. So, like I told the veteran, walk away from it, walk away from the build, because you know what, he's going to take you and request the money, and he did request the money. They got back 14,000, which is supposed to be the amount that you should have been paying as a veteran. So as a realtor, look at that for your client. Look at that, because that's really important for them to know that you understand the rules as well of what they can pay for.
Thank you. One question that I think we want to make sure that we address: MPRs, minimum property requirements. What are the minimum property requirements that the VA or that's required? And this would go, I would think, for both the Texas Veterans Land Board and the VA loan. What are the minimum property requirements for a VA loan?
Anthony, I'll let you start because I always start first, bud.
I'm not sure what the minimum requirements are for.
Okay.
You mean, I'm not sure. That's a loan officer's thing, but
yeah. And what Anthony's saying, so and the minimum property requirements are things like access, so private roads, ventilation,
oh,
so your minimum property, your minimum property requirements follow the Freddie Mac and Fannie Mae guidelines. So it used to be that you would see that they would come back on these appraisals and have some additional items all the time, and they go, oh, it's VA, oh, it's VA. And by the way, nowadays they still blame VA when, by the way, that's just the minimum property requirements, right? But it's things such as access, to below the house if you needed to, if you're built on, pier and beam, private roads. It's all the normal MRP. And again, that list I'm going to send out to you that talks about the VA stuff, it has those minimum property requirements on there. But again, it follows Freddie Mac and Fannie Mae. So it's no different than a traditional mortgage that you're doing on a conventional side of things.
And that runs into VA appraisals. What special considerations should we be aware of with regard to VA appraisals?
So I'm gonna let everybody know this. So a VA appraisal is the best process in the entire industry. Now let me tell you why. This might take a little bit longer, but I'm gonna tell you why, right? So 20 years ago, and CJ knows I really like this subject, by the way, so she's like got me on a hot spot right here. So 20 years ago, 15 years ago, you would be doing a loan, let's say in the Woodlands, okay? And the appraiser would show up from Angleton. Now, I'm not saying it was a bad appraiser in Angleton, just that he or she didn't know the Woodlands, right? So everyone's like, oh my gosh, this the appraisal missed value, and this appraiser down there didn't know what they were doing, et cetera, et cetera. So VA a long time ago went to a geo-based format. So now if I've got an appraisal up in the Woodlands, I'm now going to get somebody from the Woodlands or Spring, maybe Magnolia, maybe Conroe, but somewhere in that geographical vicinity. That way, number one is I'm not experiencing what I used to have, which is people not knowing the market, right? But number two is, here's something that took place in 2020. VA put a new process in place. Actually, before I do that, VA also has an AMC. They were the first group to have an AMC, which is an appraisal management company. And VA, even during COVID, when you had all these appraisers were telling you it's going to take me a month to get an appraisal back, or 2 months, and I'm going to charge you to some exorbitant amount of money, the VA still 2 weeks, and it was whatever fee that they had. So you cannot overcharge, right? So VA, once it was accepted, they started to get the appraisal back in 2 weeks. That is still standard today. But here's the coolest thing I like about VA. VA has something called Tidewater. So in 2020, they put Tidewater in place. What this means is, let's assume now you have an appraisal, okay, and the appraiser cannot make value, right? They're struggling to make value. What they will do is they will send the lender something called Tidewater. I am out here on this property, and I currently cannot make value. And the appraiser a lot of times will send us what they're using as comps. So then I have 48 hours to communicate with the agents, both agents, and say, by the way, Tidewater was issued in regards to this property. They need some assistance in finding value. Okay. Now, here's why it's really cool. Let's assume that CJ is the listing agent. And let's assume that who else we have online? That Miss Black is the buyer's agent, right? So we're going to have both those individuals, right? So the cool thing is I'm going to call Miss Black as the buyer's agent, let her know. She's going to call CJ, let CJ know what's going on. And now both agents are starting having a conversation. We need assistance in regards to value. Guess what you've indirectly done? You've already had that conversation. Okay, we need to make sure we can make value because the appraiser is not finding the amount of value right here. So the appraiser is going to go through. We have 48 hours to get the comparables back or any notations that we need back for the appraiser. The appraiser then puts it together, sends it back off to us, and that's where we're going to issue our notice of value, our NOV. We are seeing, though, that we miss less values on VA loans than any other loan out there right now. And mainly because we're having this cooperative arrangement between all parties, lender, the appraiser, the buyer's agent, the seller's agent, and it's called Tidewater. Now, every once in a while, I will have a realtor who says, tell the appraiser to do their job. And then, okay, guess what? It misses value. And they're like, well, I want to contest it now. What VA has decided to do is, why make it an afterthought? Why not go ahead and contest it during the appraisal? The appraiser says, they're not going to tell you what value they have. They're just going to say, we cannot make value. And the onus now is on us, the agents, and obviously the lender to provide back the data to assist them on making value. It makes the transaction so much easier. And if there is a fault, as far as there's a problem in regards to appraised value, it's being addressed in a completely different way. It's now like, hey, guess what? We tried, we couldn't make it. Let's go and talk to our buyers and sellers and negotiate. It is the absolute best process for an appraisal process. I wish we'd adopt that across all lending standards that we have, including jumbo, VA, FHA, conventional. Unfortunately, we don't, but VA has the best appraisal process out there.
Thank you, Chris. Anthony.
No, I mean, I agree with Chris. I don't have too much to add on that. I think with the appraisal, as long as you know what, you've got to come back with the right comps. But with us, easement, you can't be landlocked. So that's one of the biggest things for us. If you're going to do a loan, they're going to check that. The GLO will check the background on everything, making sure that the land is open, accessible to the highway or to a road. It's got to be open to a road, and it's got to at least be not landlocked. That's our largest requirement.
Yeah, the right of way is huge.
Right away. Yeah.
Yep.
Thank you very much. I think we are right on time, I think. Any more questions? Were there any more questions that were in the chat that we needed to?
I'm going to let everybody know why reason why VA lending is so important, by the way, because I think this is something you have to understand. Houston has more veterans in it than any other city. It is the largest amount of veterans in any other city in the United States. And Texas, California tries to say they're bigger than we are when it comes to veterans. We have more veterans in Texas than any other state in the nation. So if you don't have a focus on VA lending, if you don't have a focus on serving our veterans, you're missing out on an amazing market. And here's one of the biggest things I'm going to tell you. Make sure that you develop your VA, let's say, go-to for our veterans. So there's a great class out there called MRP. If you haven't taken it, it's really good. It's a military relocation professional. HAR teaches that. Just want to let you know that. But also make sure you develop individuals who might have some great services they offer to our military, right? It might be an insurance company. It might be great places to eat. It might be a moving company. It might be one of 1,000 different services. One of the things I would say is it looks really cool when a veteran walks up and says, hey, by the way, so you're buying a home? Absolutely. Here's my VA list of preferred services and discounts you could possibly receive if you qualify, right? And I will tell you this. I have more of my clients come back to me and say, oh, Chris, man, that was great. The moving company gave me a 10% discount, or the restaurant you gave me to, I told them I showed them my military ID and gave me this, like from the littlest of things to the biggest things to moving. Make sure you create that sort of military, service provider list that you want to work with. I think that would be something huge that everybody who wants to work with our veterans continue to do so and sort of develop that right there.
And I think we got one question, CJ. It's a really important one. Can children of veterans be qualified for VA loans? From our aspect, if you're, if you're missing in action or killed in combat, then yes, the family could use the VLB as part of the participation. Is that the same thing for VA, Chris?
Same thing, yeah. But if what happens is on a VA side of things, so a VA is from a traditional mortgage, it's for the veteran and or their married spouse, right? First and foremost, it would have to be an extenuating circumstance if we were going to use somebody like the child, as you mentioned right there, was killed in action or MIA. But traditionally speaking, we haven't seen that in a long time. I haven't come across one probably in 20 years. But it's for the veteran and or their married spouse. So here's the funny thing I do tell everybody. So we're gonna get married. So they're almost newlyweds. They're engaged, right? And so I have to let them know it's for the veteran or their married spouse. And here's a great justice of the peace, by the way, in case you guys were looking for it. So just to let you know, because I have sometimes people come to me and say, well, I wanted to be a VA loan, but I'm about to get married, but we're going to buy our loan ahead of time and we're not getting married till next year. And so those are conversations you have to have because it does have to be that. So that's another thing I want to make sure everybody does understand from that perspective.
Right.
CJ, you still there? You went on. Oh, there you are. Okay.
I'm here. Thank you very much. Here's another question I wanted to put out there. There's a question in the chat about VA assumptions. VA assumptions. Can you address that, please, Chris?
Yes. So
VA loan assumptions.
A VA loan is an assumable loan. Okay. It can be assumed by another veteran or by somebody who is not a veteran. It can be assumed by both of them. Okay. But here's the difference between both of them. Let's assume I am trying to free up my eligibility and I have an individual who wants to take advantage of my 3% interest rate because I'm going to go buy a new home, and that individual is not a veteran. If a non-veteran assumes a VA loan, the eligibility stays with the veteran, okay? If it is assumed by another veteran, then the eligibility would move to the new veteran. So you have to always be careful about that. People ask me that question all the time. Well, Chris, I've got a VA loan and it wants to be assumed. Can this person assume it? Well, if they qualify, they can assume it. But are they a veteran or not a veteran? If they're not a veteran, it doesn't do you any good because the eligibility is going to remain on your eligibility. That's number one. Number two is, let's assume that you bought a home 4 years ago for $200,000 and you got a 4.5% interest rate, right? And today that home is worth $500,000 and you want them to assume it. You got to make sure your client also has enough money to bring that difference to you. And they can't put a second lien on top of it from that perspective. They can't do a home equity loan on top of that. So the whole adage of, we'll just assume it. Well, what's going to happen to that equity? Do you think is the seller going to give you all that equity, or how do you have the money to put down to get all that equity out of it right there? So you got to be a little careful on assumptions, and that's the misnomer. Some people just don't understand. An assumption just doesn't mean I'm going to go assume it. There's a lot of other factors associated with it. Are these the VA to VA, VA to non-VA? Is there money involved? How much money involved? Do you have enough money to cover the equity difference that they're looking for right there? And so it's possible. But again, every case is a little bit different. And here's the one thing about assumption. If someone's to come to me and I am not holding their note, I cannot process the assumption. The assumption is only processed by the servicing company, okay? So I can guide them and tell them things to ask for, but I can't technically do that loan because it's an assumption, meaning that it's going to be assumed by somebody else with the servicer that they currently have on the note. So just an FYI. If I worked for the servicer, so if it was New American and I had the loan myself, then I could work on it. But other than that, if it was another servicing company, you got to go to the servicing company that's actually using it.
There's a couple good questions in there. There's a couple of good questions in there, CJ.
Another question or another point for the VA assumption is because you're working with different servicers, it can take anywhere from 45 days to 6 months to process.
Yes, again. Yep, and that's the one thing CJ and I talked about. It's not a fast process. It is If you think it's going to be fast and your seller has to get out of that property, do not think an assumption is going to happen fast.
Yeah. Okay. One of the questions I know I saw was Rosie. Rosie was asking about the fourplex. And I don't know if we provided clarity with regard to that, Rosie, but you did ask if if I understand your question correctly, is it that the veteran has to live in that specific unit, the one unit of the fourplex that they live in, they have to live in it for at least 12 months before they can lease it out? Right. And short answer to that is correct. I mean, there's no, and correct me if I'm wrong, Chris, there's no specific time frame given by the VA as to how long the property should be occupied, but the home is supposed to be your primary residence. It's supposed to be your primary residence, and at least a year gives the impression that it was your primary residence. However,
so
go ahead.
Oh no, I was gonna say, here's the way VA says it. VA says is you have to have the intent to occupy at the time of closing, right? Which means you have to occupy within the first 30 days as a primary residency. Now, let's say you're PCSing out of the area, and so you get your orders to move out, and now 90 days later you're going to leave and you want to keep it as investment property, you can do so. VA is flexible about that. What you cannot do, and this happened to me at a closing, okay? You can't sit at a closing and tell me, Chris, what time are we going to finish signing the docs because my renters are looking at moving in, okay? You can't do that, by the way, okay? And I say it jokingly because it truly happened to me. You have to have the intent to occupy, and after closing, you occupy. Now, if an extenuating circumstance happens, you can move out. Now, here's it really fast because I think it's important as well. So let's assume that you're stationed in New Mexico, though, and you're buying a home in Houston. You're like, Chris, how am I supposed to occupy? Well, your spouse is going to certify occupancy, right? So you might have your spouse lives here. This is their primary home with your children, or it might just be your spouse with no children. You can certify occupancy that way. Or let's say you're deployed, it's considered intermittent occupancy, right? Because you might be deployed out in, let's say, Germany, but Houston is your primary area. So then you're going to do intermittent occupancy, right? So that's what occupancy is considered. But when you buy the property, it's because you are going to consider that property as your primary residency at the time of closing and occupy within the first 30 days.
Thank you. Anthony, you said there were some more questions.
Yeah, there was another question. It's a good one. So someone actually receiving calls from contacts about veteran advocacy and benefit association looking for agents to help represent vets. They think it's a scam, but it could be out of state numbers. Is this common? So I'm actually working with the Marines and Army battalions for transition housing from other states. So basically, I send out the message to my realtors that are my network to see if they can help me. I think I called you, CJ, last month. I work with NASA. So I actually sent out a big memo for realtors that are in the area that can help me with the transitions for veterans that are coming from Virginia, Maryland, so they can help find these veterans homes because they've already been approved for these loans, right? So it depends on how you're setting up and how you're getting these messages. If out of nowhere you got this message, it's kind of different. But if you're in transition teams, then your name was already given to them. But it's kind of odd for you just to get a phone call from out of nowhere.
And I've been receiving them too. I've been receiving those calls from organizations that are, and what you should do is your due diligence. Research these organizations, go to their sites, because I was listed on one, and I had a fellow realtor call me and said they were approached by that organization. And they said, I saw your name on there. So, is it, what do you think? And for me, it was, they just wanted my money. And I let her know that. So it's for you to do your due diligence and research the company. Some of them are new. And yes, we believe in giving chances to organizations that indicate that they want to help the veteran community, but do your due diligence, do some research. If you see someone, a fellow realtor on there that's listed, reach out to them. Hopefully they'll be able to give you honest feedback about it, but not just one. If you see somebody that's in a neighboring city that you just see their name and call them and ask them, do that, because there are so many organizations that are targeting the military and veteran community. It is amazing right now how many are out there targeting, just trying to benefit from the military and veteran community.
One of the questions, by the way, is about the flipping rule. So the flipping rule is for FHA loans. You have a 90-day flipping rule in FHA loans that does not apply to conventional or VA, by the way. Just want to make sure I answered that.
Any more questions? Want to be able to address everything that is in here.
Do they feel comfortable now working with the veterans now that we've done this? That's my question. I mean,
I would agree. You know,
I mean, do you guys feel more comfortable
you're better
approaching
if you know
a veteran and making sure that, I mean, we want to help you close these loans. I mean, the VOB is always closing loans, but I'm willing to help you guys make money. I always call everybody. I definitely want to make sure you guys make money, but I don't get my phone ringing before 4 o'clock. Don't call. 4 o'clock in the morning, I won't pick up, CJ. Unless it's CJ, I don't pick up.
Because he knows I'll come knock on his door. Another question that I saw in there is regarding the down payment and earnest money. The down payment is a totally different amount
negotiated item
that has nothing to do with the earnest money. And one of the things to educate, you're going to, I know a lot of veterans are under the mindset that because it says no money down or no down payment, that means they don't have to bring any money at all. And so it's for you to be able to, when you have that initial conversation with the veteran, is yes, once you verify that they qualify for a VA loan, which is no down payment, is to be able to provide the clarity of down payment is one thing, closing costs is another. And to be able to bring clarity to them regarding that, explaining the fact that they're going to need, earnest money, option fee, all of that, all of those funds that are initially required. But of course, the fact that the earnest money and option fee, if you close, the option fee included, will be credited towards their closing costs, the cost, that kind of stuff. But yes, sorry, I'm gone again. So hopefully that answered that question.
Well, I'm glad everybody gave us a really good thumbs up. Everybody really liked it. And I'm seeing everybody right here. If a vet has a loan on a property now, what would the process restrictions be able to buy and sell on a property? Very good question. So in other words, if you have a VA loan and they want to buy another home and leverage their VA eligibility, your eligibility can always be reset based on various factors. Number one, you can refinance the home to another product, specifically a conventional loan. You can pay it off and have it paid free and clear. That will free up your eligibility. You can have it assumed, we talked about that a little while ago, by another veteran, and that would free up your eligibility. Or you can sell the property. You can sell it, and that would free up your eligibility as well. And the time frame associated to free up your eligibility, so if you're doing a back-to-back closing, is 0. I can close, and everybody can. You can close the new purchase and the sell your property on the same exact moment right there, and that will free up your eligibility. So just an FYI, there's not a lot of restrictions associated with it. It's just a matter of making sure we plan accordingly right there as to what you're looking for.
Okay. What other questions? Please, there's Mary Angie. I know she's going to say this, but I want to say this too. Please share this information, this webinar. Please share it. We want everyone to be equipped with this information. We want the VA loan to become a smile loan, not a frown loan. So please, and reach out to Chris and Anthony. And, when you call them at whatever time, let them know that CJ said I can call you whenever you heard her say, I can call you whenever.
Yeah.
That is true. Well, don't be shy. We're all here to take care of you. I know there's a lot of questions. If you have afterwards, give us a call or give us an email. We'd love to be able to address that right there. I know someone put, hey, this class might have been too short enough. The problem is there's so much information out there. We tried to put this together and give you some basic information. We're probably not going to hit every single question, to be honest with you, because there's so much about it. But there are some really good resources. I teach a VA class. There is an MRP class through HAR. There's a lot of stuff I do with a lot of other organizations. You have obviously what CJ is doing with VREP.
VA Rep.
VA Rep, that is correct. And you've got a lot of good stuff out there. So just make sure you're engaged and make sure that one of the things that we put out there, we put a lot of the different training and education that goes on for everything. And so this is specific today was to talk about affordability and to bring CJ, myself, and Anthony on to talk about VA lending specifics in regards to Texas VLB and VA. But if you do have any questions, we're all here to answer any of the questions for you. And don't think it's the only time you can talk to us.
Chris, is your office in Houston?
Yes, absolutely. The Kelso Group, that is correct.
Okay.
Yep.
Thank you so much. I couldn't ask for better panelists today. There's so many good information, so many questions that came through and you were able to answer them. So we are appreciative of your time and thank you so much for being here. And I'm sure this is not the first webinar that we're going to have all three of you. We're going to pick your brain until the end. So don't be scared. HAR is here to help you for your clients. And we are very happy with the panelists today. I put the contact information for all three of them in the chat. I will also send the recording, and with the recording in that email, I will put the contact information for them as well, so that if you have any questions, feel free to call them and email them like they say. Again, thank you so much for all three of you. And just to let you know, we have a few more webinars through the end of the year. Those webinars are going to be based on AI. I know AI is a very big topic right now, so I'm going to put the link to register for those webinars in the chat. Join us and learn a little bit more of how to get educated for you and for your clients. And again, thank you so much, Anthony, Chris, and CJ. It's always a pleasure, and I'll be in contact with you very, very soon. Have a wonderful Thanksgiving next week.
Thank you, everyone.
Thank you.
Thank you. Have a good one. Thank you.
Bye-bye.
Yeah.